Mortgage calculators. There's a lot of them out there. I'm showing you the PC version of the Karl's mortgage calculator. There is also a app that you can download on your phone. It looks slightly different, the interface, than this one, but it has all the same information. And once you get used to using it, it's very handy when you're out shopping for homes and loans, and you can quickly see what the monthly payments are going to be, what overall are you going to be paying, and just kind of playing with the numbers regarding if you have money to put as a down payment, what that looks like as far as affecting your monthly payment and the overall loan. So I'm using this Karl's mortgage calculator. I've put in here a loan value of $300,000. Right now the interest rates are in the low sixes, so I'm just putting in a 6.13 and then a 30-year mortgage. So if we do this, you can see here the principal amount of the loan, the interest rate, the term, and then on the right you can see if you were to keep the 30-year mortgage for the full 30 years and not refi, not pay anything extra during that time towards principal, you will have paid in interest alone $356,568.83. So the total amount you will have paid for this house with this loan, with no extra payments, no changes, for principal and interest alone, $656,568.63. So, and then further down here, you can see the monthly payment. So what is your monthly payment with a 30-year note at 6.13 on $300,000 is going to be $18.23.80 a month. And again, that is principal and interest only. That does not include your escrow account and any extras that you have to pay as part of that monthly mortgage payment. Now, if we were to change this, if you're shopping around and just trying to see, how would that change, or what can you do to change your monthly payments? You can first go here and let's do something drastic and do a 15-year mortgage. So now 15-year mortgages are, I think, around the 5% interest rate. So we're just going to put in 5% here and change this to a 15-year. Now you can see the monthly payments went up, but you have a lower overall interest, which also means if you go up here on the right, you will see the total interest paid for a 15-year at 5% interest is $127,000 and change. So the overall over that 15-year period for the $300,000 loan, you will have paid $427,000 and change. Now, when you make it a 15-year mortgage at 5% interest, your payments do go up. The principal and interest are now $23.72 and change. So again, this is in, you have to add in any escrow. So any property tax payments every month that you're making. If you have an HOA, that would be in there. Any servicing fee and other fees or costs would be added on top of this principal and interest. So the other question I get asked is, do down payments at closing really help? Sometimes they can help. So let me go back to a 30-year because that's more realistic for most of the people. And right now it is 6.10, 6.13, something like that. So we're going to change it back to 6.13. At closing, if you make a down payment, let's say $15,000, so 5% down at closing would change your payment to $1,732.61, as opposed to no down payment, it's $18.23.80. So you can see how you can quickly play around with this information to help you make decisions on what you need to save up, what kind of a loan can you afford, and based on the interest rate, do you want to do a lower interest rate and higher payments because you want to reduce the number of years? You just have to look at the interest rates. I mean, if we were, let's say we do a 50-year on here, but you can put it in here so you can really see what that would come to and how that would maybe save you a little bit month to month. If it's a 50-year, I'm going to assume the interest rate is going to be a bit higher. I don't know. Let's just say if it's 6.5%, but it's a 50-year. Yes, you're going to be paying a lot more for that house. However, your monthly payments now are down to $16.91. So my point with this is just to show you the mortgage calculator. If you guys are out shopping around, looking for houses, looking for loans, looking for different lending institutions and what they can offer, have an app on your phone or accessible where you can run these numbers, see what's comfortable for you in your budget, and then move forward with purchasing a house or looking at refinancing. Let's say you have something odd like $269.8 or $762.40. Let's say you have that on a current loan you want to refi, and maybe you're getting an interest rate of let's say 6%. So you want to do another 30-year. So you can see here your monthly payment will be $16.17 and change. So it's a good way to do a quick comparison. What's your mortgage now? Is it worth refining? Are you going to make up the difference of whatever the closing costs are, and is it worth it? So if your current interest rate for your current mortgage is like 8%, 9%, and you're able to get a 6% for 30 years, it's probably worth paying the closing costs and getting a lower monthly payment. But look at your budget, see what you can and can't afford, find out from title companies what it will cost to do a closing, find out from the bank or whoever you're going for the loan, what is the cost of closing, and make sure you know what that is up front so you can save for that before moving forward and then getting surprised with closing costs. What does it really do when you make extra payments to principal? So again, this is a really good tool to help with that, and you can actually see where the savings comes in, how you can stretch that dollar value within this mortgage. So if we go over here in the mortgage calculator to extra, and I've populated here, we want to start an extra payment as of the first payment to 360 months of the life of the loan. You're going to make an extra payment of, let's say, $25. Now, when I put this in, if you would watch over here on the right, top right, it will give you this data of your savings. So I'm going to put in $25. So along with your mortgage payment, if you're able to pay an extra $25, it goes to principal. Now you can see here the reduction in your overall length of your mortgage. You will have reduced that 30-year by 1 year and 1 month if you make that extra $25 a month for the length of your loan. And then here you can see what you actually will pay extra for that year. For the length of the loan is going to be $86.50 with that $25 a month. But in savings, because now you're reducing the principal, so your interest payment is going to go down because your principal is lower, you will have saved $15,934 and change. So if we made this, $30 instead of $25, you can see how this starts changing. You're reducing it by 1 year, 4 months. The extra that you're actually paying is going to be the $10,290, but the savings you're going to see off of that mortgage is going to be $18,926 and change. So again, if you're able to get a 30-year I don't know if the 50 year is going to actually happen or not, but let's say it does. You can do a 50-year and then look at that way your payments are reduced, but you can always go in and add extra payments. This is assuming you are consistent throughout every payment, you never miss, and you never have late fees, and you're always making that bit of extra payment. But even if you miss a month or here and there, you're still going to see the savings. It just won't be as much as what I'm showing here if you're consistent. But of course, consistency is key with everything, whether it's investing, making payments, anything. Consistency is so important and critical. So just another little benefit of this Karl's mortgage calculator is that you can add in not only your principal, interest, and see what your monthly payments are going to be based on the term of that loan, but you can also then put in what if you were to do extra payments, what would that do for your overall loan? How is that going to benefit you? And again, is it something you can afford? So play around with the tool. If you have other tools, let us know what those are. I'd love to see some other tools at work and how easy they are to use. For the most part, if it's something easy that you can quickly put on your phone, run the number, refinancing a house or buying a new home, and how that's going to impact your overall budget, this is a great tool to help you get those numbers right and realistic and see what you can and can't afford. I know there's lots of tools out there to help with this type of thing when it comes to mortgages and deciding and running numbers. What tools do you use? Drop a comment and let us know. Include a link if you would, and what you like about it. Is it the interface? Is it the ease of use? The data that it gives you? Let us know. And if you found this video helpful, let me know that as well. And we'll try to put more out there just to give people little tips and tricks on decision making when it comes to mortgages, real estate, loans, and in that space. So give us a like and subscribe, and don't forget to follow.